Welcome to Dad's DeFi Space. I'm so grateful that you came out for today's live stream. If you are here, please give the video a like. Let's get the word out. We got a great stream for you today, but before we get there, welcome back to Dad's DeFi Space. I'm Kevin, a teacher, a father, a DeFi investor, and today we're going to dive deep into what might be one of the most critical points of this entire bull run. Look, Bitcoin has been teasing the top of its range for quite a while now, and we have been hovering between 120K to 125K over the past few days. So everyone right now has been thinking the same thing. Is this a local top? Or is this the calm before the final leg up? Or is the market cycle over and we're all left holding the bag? I have been saying this for weeks. This is the hardest part of the crypto market cycle to navigate, not the bear market, not the boring chop that rips apart traders, but right now, this time going into the parabolic top is where people make the most mistakes. So today we're going to cut through the noise and we're going to be covering Bitcoin's setup. Is it a correction or a new high coming? Macro catalysts such as Trump's tariffs, the CPI, the Fed, and of course, possible stimulus checks. These factors could be moving the market. And we're even going to look at some key altcoin charts in just a few and how I'm using LPs to take profits and DCA in and out of the market without much thought, right? But before we get to the meat and potatoes for today, understand that if you enjoy content like this, it helps to keep you grounded, transparent, easy to understand crypto analysis. Join our free Telegram group, Dad's DeFi Space, link in the description, and grab our free DeFi crash course at dadsdefispace.org. It's all 100% free, no hype, no education, just market strategies. So before we get into looking at the charts today, I want to talk a little bit about macro events that are occurring over the next little bit that could affect our markets. So let's look at the big picture here, because what is coming over the next 60 days, is going to shape how the bull run ends. So first, there's a possible Trump tariff dividend. The proposal is back in the headlines, a possible $1,000 to $2,000 check funded by the tariffs. If it passes, it's basically a mini economic stimulus, and that could be liquidity to fuel risk on assets. What does this mean in layman terms? It means your altcoin bags might pump if this happens. So if it passes, be ready, because some of that liquidity should make its way to the crypto markets. Now, what is the catch? The catch is this could stoke inflation and inflation fears. And if inflation ticks up, the Fed will delay cuts. This is a mixed bag for mixed markets, and it makes it very difficult to trade, especially if we're talking about short-term swing trading or day trading. This also affects DeFi investors, those who are more short-term, using shorter, narrow, or riskier ranges with their liquidity pools, and getting riskier with their DeFi lending and looping. These are the people who are going to be affected the most. Excuse me. I was feeling fine earlier today, but I'm starting to get stuffed up. I apologize. Anyway, so speaking about inflation, look, inflation, if it is stoked, and if inflation ticks up, the Fed could delay rate cuts. And if the rate cuts are delayed, it'll be a completely mixed bag for markets, right? So here's the issue. We have Trump and the Fed playing chicken with the market. Who's going to blink first? Look, traders are betting on more rate cuts. But Powell's wording in every press conference and every event that occurs between now and the end of the cycle is going to matter. So the bottom line is that macro trends, the news still supports some risk-on behavior in the market, but because of the uncertainties around inflation, the tariffs, and even if inflation is going to push its ugly head back into the picture, these are the things that could cause volatility. And remember, as LP providers, we love volatility. Traders love volatility. Long-term holders tend to not like volatility, but these are things we need to be paying attention to. So now let's take a look at just some general crypto market sentiment. Right now, you are taking a look at coin market cap, and we're looking at general crypto market conditions. Bitcoin is sitting at $123,600, Ethereum $4,522, BNB around $1,300. Solana is at $229. Okay, now what's interesting is fear and greed is back into a downtrend. We're sitting at about 55 right now, down from 77 less than 10 days ago. Crypto market cap has been ticking backed up. Don't you find that funny that there is the greed has gone down, but market cap has gone up? A lot of times you will see these diverging factors when the big players and the market makers are getting into the market and trying to make us stay out of the market. Because obviously they want to get in at a good price, just like we do, because your entry is as important as your exit in this space. But anyway, altcoin index at 55, fear and greed also sitting at a 55. So we are almost back into the neutral region of both. Now, what have you seen here? And we talked about this last live stream. The crypto ETF flows have been absolutely massive. $875 million, $1.2 billion just 2 days ago, almost $1 billion 3 days ago. And it has just been ticking up and up and up. Now, we are expecting some sort of correction, but who knows when that is going to occur. Now, the final thing I wanted to take a look at before we look at the charts today are our crypto bull market peak indicators. We're going to look at this every string because it's the easiest thing a beginner can look at when you think, hey, is it time for me to take profits? As you can see, not a single of our 30 indicators are hitting, but this also hasn't felt like a normal market cycle. Now, we live on truth and honesty on this channel, so I'll go ahead and let the channel know, because those in our private Telegram group, which is free, do know I sold a good, nice chunk of my Bitcoin position when we were up between 124 and 126K, around 25%. Or excuse me, not 25, 20% of my position. I don't know when the cycle is going to end, and even though none of these indicators have hit, there are some that are getting close. The Bitcoin long-term holder supply, up. Bitcoin dominance, up. Altcoin season, almost up all the way. Unrealized profit loss, the Nupal score, this one right here, is close to hitting, but not there. So we do have some indicators that are ticking up, getting closer to hitting. But if you look, we're still in the hold position. Now, we're probably going to be making some videos in the near future looking at some specific indicators that you can use to time, or at least create a ladder out strategy for market cycle tops. Some of our favorites in past cycle was Pi cycle top, pre-all multiple, rainbow price chart, the MVRV Z-score, and then, of course, some of the other ones we were just talking about, like the Nupal score. Now, the Nupal score was much higher. It's actually been down quite a bit recently, but just something to keep an eye on. Right now, we're looking at the bull market peak signals on Coin Glass. And one last thing I did want to look at before we go anywhere else is open leverage in the market. So we're going to bring up the exchange liquidation. Exchange liquidation map. Once it loads. Probably spelling it differently. It's not well. Hold on 1 second, and I'll bring this right up, guys. Here we go. All right. So what you are looking at right now, okay, this is the Bitcoin liquidation heat map. Now, what I find very interesting is we were looking at this yesterday, and there were actually more shorts in the market than longs, right? But looking here, it's kind of schemed the other way now. So let's take a look. Excuse me. Oh, let's take a look at not just the day, but over the last week. Kind of even. Look at the last day. A little bit skewed. Or excuse me, I wanted to go to the 30-day. Look at the 30-day. Oof. Yes, very much. If we get back down to 110, there's going to be a ridiculous amount of liquidations. I do expect it to possibly grab some of this right here, which is sitting at about 118.2, 2.5. We'll talk about that in just a minute. Now, taking a look at the Bitcoin, actually, I wanted to talk about this before we get into the chart. Excuse me. This is something I found within another group. And this picture really got me thinking, because we've been talking in our classrooms about the use of AI properly. The world chess master who beat ChatGPT in chess because he can be more adaptable, flexible, and creative, which is something that AI does still struggle with. Got me thinking when I saw this picture. We got Bitcoin protecting us or beating all the big banks, big government, Fed, the European Central Bank. These are the entities that are inflating our money supply. And Bitcoin, in my personal belief, is what can protect us from that inflation. What I find so interesting here, though, is there's so many people missing this now. Why do you think these big boys want to get their hands in our space? Let me know in the comments. But we know that these guys want more money, more power. Bitcoin gives that back to us. That's why I made this channel. It's why I talk about it so much, and how we can use DeFi and even leverage trading as an amplifier to increase our Bitcoin stacks. Okay. Now, what I would like to take a look at next is, hold on, gotta arrange my monitors here. All right. Now, right now we are again taking a look at the Bitcoin price chart on the daily. Okay. If you look really closely, you can see all the important levels that I've marked on the chart. Most importantly, pay attention to 18.5 as the bottom of our range, 26.5 as the top of our range. If I was providing liquidity for Bitcoin, my range would be here. Although I'll show you a position on BFAT, we've been able to go much wider and still earn a very high APR towards the end of the video, or excuse me, the live stream. What's most important and what I want each of you to understand here is Bitcoin's structure is still bullish. When in doubt, zoom out. Bitcoin has been on a tear since the bottom of the bear market. So anyone out there that says we are not in a bull market does not know what they are talking about. Because Bitcoin, this market cycle, you can take a picture of my screen. It's not even the bottom. Hold on one second, excuse me. From the bottom, there we go. From the bottom of Bitcoin's market bottom from last cycle, we have increased literally 675%. Take a picture, take a screenshot of this chart when everyone is screaming super cycle and Bitcoin is just going to keep pumping, because it's not, in my humble opinion. Again, understand that nothing in this video is financial advice. Okay? I am not a financial advisor. Please, please, please do your own research. Okay? Please do your own research. So, as I was saying, Bitcoin has been consolidating right now between 120 and 126. I'm watching support around 118. And if we break that, I'm then looking at 116, which would be the 50%. And then, of course, way down towards the bottom of the range around 108 to 109. Okay? Didn't mean to move that. 108.1 is kind of what I personally have marked for the bottom. So if we cannot maintain support of 108.2, which is very, very close right now to the bull market support band, we could lose it. Now, if we lose the bull market support band, that's okay. Let me put it back up on the chart. We'll take the moving averages off for now. By the way, the yellow line is the 50 SMA, the maroon being the 100, and the purple being the 200. This is what we broke below. Going into the bottom of the bear market right here. If I were to zoom in on that part of the chart, you can see our final capitulation right here. Then the 200 crossed, and we start going slowly back up. If you zoom out, you can see it. Now, this 200, right? When we break below it, that marks the end of the bull market. Very simple thing to watch. Just look at the 50. If we break below that, or excuse me, if we break below the 50-week moving average, we got a problem, a huge problem with Bitcoin. Now, I don't want to put the bull market support band back on the chart, but you can see the last huge pump was the 200 crossing over the 50, right? Now, if you can see, right before the pump, we had a stochastic RSI cross. This is the weekly stochastic RSI cross on the daily chart. Right here on September 26th. This is a great indicator to watch the stochastic RSI to see when momentum's changing for pumps and dumps. Well, I'm a little concerned because what have we here? We have another blue cross down. Usually with a blue cross down, here you have a downtrend. Almost did here, but not really. Blue cross down, downtrend. Whenever we have a blue cross on the RSI, or excuse me, the stochastic RSI, we tend to see a correction. Well, people are starting to talk about it. So is Bitcoin going to correct back down to 118? That's what I'm watching. And if we do, if I have, let's just say if I was running a short and I managed to catch the top at 126, my profit taken areas on that one would have been probably around 122, possibly 120.8, and then 118.5 or 6. Those are just kind of the areas where we seem to be price accumulating. That's where people are buying up those sell orders. So if we see a dip, in my opinion, that's not bearish. To me, it's an accumulation reload zone as we push towards all-time highs. Now, most of my Bitcoin position is looking gravy. I still do my weekly DCA. And later in the stream, we're going to look at a way that you can use liquidity positions to dollar cost average out of the market without having to think about it, right? So right now, I am holding one Bitcoin short on Blowfin. People within my private community, they already know this, okay? I took this around the 123K zone, so it's non-profit right now, of course. But my long-term thesis on Bitcoin has not changed. Bitcoin has to be the foundation of your portfolio, the foundation of everything. Now, that is because it is the store of value in a world of fiat chaos. So every central bank right now is still printing. Every government is still in debt. And Bitcoin, guess what? Still capped at $21 million. That's why we say at Dad's DeFi space, Bitcoin is the foundation. DeFi is our amplifier, right? So what I wanted to do is pull a little bit out of our DeFi course. Now, I'm just going to pull this up. Just because. And if you haven't already, take this time, join Dad's DeFi space for free, and pick up our free crypto and DeFi course. We are in the process of revising it right now, but I still have access available for the older version, and we are slowly adding to it. Now, let's zoom out and let's look at that amplifier part, right? Well, why use DeFi in the first place? So DeFi allows our crypto to work for us. And this is where the real strategy comes in. You don't have to sit on your butts holding your crypto in cold storage doing nothing. DeFi allows our crypto to work for us through lending, through LPs, through yield optimization. And here in a little while, we'll take a look at some of my DeFi positions and we can discuss how we can use DeFi as an amplifier. By the way, part of the reason right now is I'm trying to de-risk my portfolio. So all of my DeFi positions, my fees are going into stable coins right now, either USDE or USDC or USDT. So let's talk about 3 strategies that I am using right now to help amplify my Bitcoin position in my crypto portfolio. First, I'm farming Avantis and Astar. Now, I know there's been tons of pumps, tons of FUD, and everything else with these 2 tokens, but there is so much high trading volume with these 2 perpetual DEX tokens. I am able to take out a ton of fees. Now, we did suffer a massive and permanent loss on Avantis, but we are still bullish on the protocol. I'm still holding my position, and we will dollar cost average up as it goes back up. Now, I do have a stop loss set. If you are farming, concentrated liquidity positions, you definitely want to be playing with a stop loss. Same thing as if you are doing DeFi, perpetuals. Another thing we're doing is we're still farming Aerodrome on Base. It's still an absolute beast. And the fact that Coinbase has now integrated Aerodrome DEX into the Coinbase app, people can trade all the meme coins, all the utility tokens. Heck, we might even make our own token that people can trade on Coinbase. I don't know. But Aerodrome has been excellent for farming both the Aero token and USDE. Now, we're also going to be taking a look here in just a minute at Solana and the Byreal PERP DEX, which is created by Bybit. We're going to talk about that in the near future, but so many protocols, so many tokens, so many wallets are creating their own perpetual decentralized DEXs. It is going to be the next big thing, but we'll talk about that in a few. Now, these things that we are discussing, these are all part of what I call a DeFi amplifier strategy. You keep your core assets, right? But you put portions of your assets to work in yield-bearing positions, looping, vaults, LPs, DeFi lending positions to open up more capital to earn yield. Some of these are even stablecoin looping positions. Anything that earns you a yield using the assets that you already have on your hardware wallets. So why is this so important? Is because we can compound our portfolios faster. So if you want real examples of this, go to Dad's DeFi Space right now, link in the description, and check out our latest Yield Hunters post. And join us in our free Telegram group where I talk about all my DeFi plays, leverage trading positions, and market analysis. Now, next, I would like to discuss some altcoin charts. I know a lot of you out there love coming to streams just to check the charts. So let's take a look at some of our favorite altcoins. Now, right now, we're just looking at crypto bubbles. Like, check it out. Solana on the week is up 4.2%. But Astar DEX, even after a massive dip, when that FUD came out about their data, DeFi Llama stopped listing Astar yield data and trading data. Just they thought it mirrored too much the Binance trading, the actual Binance exchange. So Astar down a little bit. It's starting to come back up. But look, BNB performing just as well. If the token on the chain performs, the chain performs. So you can always get less risky altcoins by looking at what chain was the token built on, right? Those are your pick and shovel plays, your layer ones. And let's, if we take a look at Astar, up 22%, and Avantis down 20%. Not good, right? So Astar has been an absolute monster. Binance backed, aggressive network growth, waiting for a cool off, honestly, before adding, but we have had some of that cool off, and I'm going to probably add into my LPs. Likewise, Avantis, Coinbase backed perpetual DEX, currently outperforming the sector, but obviously the APRs on Avantis are going to drop as liquidity deepens. So that's just a couple of our plays. Last live stream, I think we took a look at Tau, a decentralized AI narrative, has absolute great fundamentals. I love their staking design. And not only that, the Tau ecosystem, the Tau ecosystem is hard capped at 21 million, just like Bitcoin, and we love that. So I'm still staking that Tau for yield. I have not shared my sub yet plays yet, but I will in the near future. This is conviction towards Tau, not hype. Now, obviously, if you've been a part of this channel, you know how bullish we are on Aerodrome, and I'm still holding a good amount of Aero token. I'm going to probably even convert some of my ETH into Aero quite shortly. So Aero is holding excellent after a strong run. I'm still watching that dollar support, and I'm still bullish on the base ecosystem, even though Coinbase pisses us off sometimes, correct? I don't think I'm the only one out there who feels that way. So now let's take a turn. We're going to take a look at some more charts. We already checked out Bitcoin. Now we're going to take a look at ETH. You cannot talk about altcoins without looking at Ethereum. Okay? You can't. Excuse me. Ethereum right now is sitting at $4,510, and we just tapped into the 50-week moving average. Now, as you can see on the daily, we tapped up into the top of our range, 44,560, and then into the bottom, which around 4,400. We really need to keep an eye on this. So let me go down to a lower time frame on the 4-hour chart. You can see ETH is just fighting to get back above the 50-week moving average and get above our zone of 4,555, right? If we confirm below, say, 4,450, we could just continue on to the 100-week moving average sitting at 4,300. Then we have the 200 sitting at 4,275. Now, on this chart, we have not had a blue cross down yet, but we're going to have to keep an eye on the stochastic RSI and see what happens over the next few days. Now, if we go to the daily chart, what do you notice about the stochastic RSI? Sorry, I did not have my chart up here. So we have a blue cross down on the daily, just like Bitcoin. So that's not good. Now, I think that ETH will have its time to shine once we can gain support above the all-time highs, $5,000. But until then, ETH is still struggling a little bit, not near as much as some of the other tokens, but ETH is the big daddy altcoin. Don't forget it. Now, I want to take a look quickly at Bitcoin dominance, getting low on time. As you can see, Bitcoin dominance is on an uptrend again, and we're looking right now on the daily chart. We could easily come back up, try to reclaim 60.3. Wouldn't surprise me one bit. And to be quite honest, on the daily, you have this range right around 60% that we could hit also. Just something to think about, right? Now, if we go farther out on the weekly chart, you can see we had a massive drop in dominance. That's when everyone started screaming, altcoin season is here. But is it? It doesn't feel like it because only certain altcoins are performing. So, of course, we're going to see if Bitcoin dominance actually can get above 60%, but it's hard to say at this point. Now, I wanted to bring up something today. We're going to look at some altcoins for a bit. But as we look at altcoins, I want you to consider, what is their evaluation against Ethereum and Bitcoin, right? We're going to take a look at Solana first. And I tend to pull up Solana a lot. And we're looking at the Solana USD chart. So it looks super bullish. I'm kind of range bound in the daily between 211, 212, and the top of the range would be around 238. Let's just say 240, right? So if we take a look over, let's say since summer, June 25th, Solana is up 100%. That's nice, right? But let's take a look at Solana's evaluation with BTC. Is it doing better? Is it doing worse? Is it just an oscillator? Let's go out on the weekly. What do you see? Number one, we're almost getting that cup and handle formation on the chart, which is kind of interesting, right? Cup. Handle. Here's a problem. We got to get above the handle. We're not. Go below the handle, we're going to break down. So it's hard to say. But this is something I'm going to watch over the next little bit. Now, if we were to go to the regular Solana chart, you'll see probably a bullish cup and handle. But on the Bitcoin chart, it looks quite a bit what? Less bullish. So this is also a liquidity position that I've been looking at on Orca. And if we don't have too hard of a correction, I'm really checking out this range between 0.012 and then the top part of the range right here at 0.031. I think this is an excellent kind of area to look at with Solana. And if you're even more conservative, I mean, heck, you could run it longer. I would not. I would keep mine up here. But, you could go even higher. Like maybe we get back up to where we were last cycle, 0.04. But most altcoins are losing value against their Bitcoin pair. Let's take a look at some that aren't so hot. Let's take a look at, would be a good one. Let's look at some meme coins. We'll take a look at one I used to be in last year, WIF, right? Let's look at WIF BTC. Goodness, that chart looks absolutely horrendous, right? Look at that. Kind of bottoming out. Not bad. Definitely not looking bullish yet. Okay, let's try another. Let's try Litecoin. That's one I love to hear people talk about. LTC, BTC. Now, there was a post on X from the creator of Litecoin. What was his post? I should have put more of my money into Bitcoin back in the day. Maybe a lot of us should do that. I don't know. So let's take a look at BTC Litecoin. Now, it doesn't look... It just gets worse and worse, right? I'm going to go on the weekly chart. We're going to fit it to screen. It's easier this way, right? We're going to go all the way back. There's your Litecoin chart. How's that look? It looks like I did in college after a 8-hour night out session with my boys doing things we shouldn't have been doing. It just puked. Now, that doesn't mean that Litecoin doesn't have bullish moments against Bitcoin, but that's something to think about. Sometimes when we're looking at our altcoins, we really need to check out how they're performing against Bitcoin and how they're performing against Ethereum. So let's check out and go back to Solana. Look at Solana versus ETH. Now, Solana was showing a ton of strength at ETH. Around 2023, Solana outperformed ETH massively. We're looking at about 1,000%. Ooh, right? I wish I would have taken all of my ETH and put it into Solana, which I know some people did. Great job if that was you. But ever since we hit this top, Solana has been in a downtrend. So the question is, will Solana break above the 0.055 level on Ethereum? Or is it going to break below the 0.038 level on Ethereum? Which one is going to perform better for the rest of the bull? Now, if you watch my channel, I think you already know my answer. Solana has the potential to outperform, but my bet would go with the Ethereum. It's a safer play. Now, if Solana shows strength and has support above this 0.05 area, and then I will probably be converting more of my ETH into Solana, but we have not broken this downtrend yet. And it looks like we're about to go back down again. Okay, if you go on the daily, You see it even better. The 4 hour, kind of chopping between 0.04 and 0.05. Yeah, something to look at. Now, the next coins I wanted to look at today are, let me find it, Sui. And you know that we're super bullish on Sui, but there's a problem. We were looking at this not too long ago. I want to show you. I'm on the daily chart, and there's way too much on here. I got to take some of these indicators off. What do you notice? Since Sway's recent all-time high of $4.44, we've been in a downtrend. Ever since we hit that range, right? We've had a lower high, another lower high, and another lower high. If we connect all of them, what do you notice? We're not even tapping the line anymore. See? It's crazy. It would not surprise me that Sway stays in this downtrending channel for a little while. Now, we could break this downtrend range, who knows? But until then, I'm going to be careful with my Sway position. I'm not buying a whole lot. I'm not buying really any right now. But I am farming a little bit. And I may consider going short with some of my lending positions on this network. Not financial advice, because I haven't done that yet, but just looking into it. All right, enough of the charts today. I would like to take a look at some news. And we're going to keep on with Solana. Now, Solana's DeFi DEX aggregator, Jupiter, we have some updates. So Jupiter is now launching a native stablecoin. The Solana DEX and DeFi protocol is expanding its feature set with the launch of its own stablecoin, Jupe USD. They're doing this with the help of Athena Labs. And like we said, we're bullish on stablecoins. The total stablecoin market cap during this cycle has gone up over 75%. That's $300 billion. This is just going to allow the DEX to have more power in this space. And on that note, you really should also take a look at this, because if you have not done or looked into this yet, Jupiter. Hold on, let me confirm my wallet real fast. It's trying. It's time to claim your ASR airdrop for those Jupe stakers out there. And that's something to highly consider as we go through this cycle, right? Now, I'm going to verify my Phantom wallet. We're going to check my small airdrop allocation, because I sold off a ton of my Jupe after I unstaked it 6-7 weeks ago, 8 weeks ago, something like that, right? All right. Now we're going to scan right here. And we're going to see what this looks like. Okay, it's not reading it for some reason. Hold on. I wonder if I have to go in the wallet to do this. Anyway, we're having issues with Jupiter. We'll look at this at another date, but what I want you to hold on. I'm videoing. I'll be right done. Now, sorry about that. Now, what we're doing is claim, just be sure that you go to Jupiter DEX. You claim your airdrop. Okay. That's what this is about. Okay. Now, going on about Solana. On Solana, it accounted for over 95% of all tokenized stock volume over the last 30 days, followed by Gnosis at 1.98% and Ethereum at 1.83%, right? Super, super big deal. Now, this is from Solana Floor. I follow them on X. You can also follow us on X at CryptoZone1013. And if you're interested in trading the tokens that we're talking about, check out our links from Belowfin, Perpetual DEX, Perpetual Sex, a centralized exchange. But I love working with them, trading on their platform. And if you use our link below, it helps support the channel. Same thing for Weeks and BitUnix right now. Now, what I wanted to take a look at, now that we've talked about Solana, we talked about this other today. I just wanted to bring it up again and show you is X stocks that are being traded on Byreal Perpetual DEX. This one's associated with Bybit. So yes, if you're a US-based customer, you're going to have to use a VPN. What's so interesting here is if you take a look at the pools, they are still extremely hot right now, and many of them are still running rewards. As you can see, this one is out of range right now, but our other one is not. It's earning a 300% APR, so we'll probably put more liquidity into our wider range, which is between 410 and 453 on Tesla X, which is Tesla derivative X stocks, right? It's crazy, but super, super bullish on, on tokenized equities. But we're going to be making a bigger, deeper dive video on this in the near future. In fact, our last Yield Hunters report at Dad's DeFi Space was how to provide liquidity on the Byreal DEX. Now, moving on to our final couple things. Here's the article I was just talking about, Yield Hunter report, farming Tesla X on Byreal. And here's the article. You can see all of our different perpetual DEXs. Now we have one more to add that I wanted to share. This is big. At least I think so. We'll see what happens. MetaMask is integrating with Hyperliquid. All these new perpetual DEXs are cutting into Hyperliquid. This is what would be a pretty good business deal, in my opinion. Could be bullish for MetaMask. Could be bullish for Hyperliquid. We're just going to see how this one plays out over the next little bit. Something to consider. Now, one of the final things I wanted to do today before we get off the stream is I really wanted to have a quick but intense discussion. I want to discuss DeFi and crypto trading safety. Not all of it. Many of you who've watched this channel already have a strong knowledge base and foundations of crypto and DeFi. But if you don't, again, check out our free course. It's free. What I wanted to discuss though today is why euphoria is so dangerous. We're entering phase 4 of the bull run, and we're officially in altcoin season, even though it doesn't feel like it. The altcoin season index just a week ago was sitting at 77 to 79%. And historically, this phase only lasts 8 weeks, 12 weeks, 3 months, 6 months. I do know last cycle it was close to a year. I don't expect that to happen this time. Altcoin season, at least the way it's been in the past. Bitcoin hits in Q4. A couple months after that, Ethereum ends up topping. That would be what? Christmas, January. And then a couple months after that, the rest of the market tops. That's kind of what happened last cycle, except we had that summer lull and then another blow off top into November of the next year. So I want to leave you with 4 steps that you can use to practice safety during this phase 4, which I believe is the hardest to navigate during a crypto bull market. The bear market is so much easier to control your emotions and make decisions than the euphoria at the top of the market. Anyone who tells you the top is easy hasn't truly invested correctly during a market cycle top. So first and foremost, take profits in steps. Do not try to time the exact top. You DCA during dips, not when things are parabolic. And if you want to be safe with it, and we're going to talk about this for our final topic today, or our final tutorial, let's say, is how you can use an LP to scale in and out of the market automatically. This means we can always be taking profit and always be stacking stables, because a crypto investor always needs dry powder on the side. So what we're going to do now is take a look mostly at my Krystal Vault. That way we can kill two birds with one stone. Now, we were not happy with how our USDC vault had performed recently. This vault actually had some issues. We had too much allocation into the Avantis protocol. And so now we are in that $500 position until it looks a little bit better. So the average APY is down, and our principal is down a little bit too. So we're going to take a look at one of my strategies within my vault, specifically what I wanted to look at, and I'm just starting to fill this position back up, is my USDC arrow position. Okay. It doesn't have much liquidity in it right now, although it's earning a ridiculous APR of 372%. Now, my range is quite narrow. Okay. And I'm going to show it to you now through the rebalancing function on Krystal Finance. Now, this is the rebalancing function on Krystal Finance. Okay. And you are looking at my position that is about to go out of range. Now, if I was going to move this and use this as my way to sell my arrow, and let's say I don't want to start selling now at 82, but I want to start laddering out at $2. These are not my actual profit-taking points. I'm using this as an example. So once we get back up to the $2 range, that is when I'll start earning yield. And that's when my LP, as people trade, it's going to swap my arrow for USDC, which effectively is taking profit between $2 and wherever I believe the market cycle top is. Let's say, I think we'll struggle to get above the $10 range, but so maybe I put it at 12. Maybe I think we'll go even higher than that. And let's go super, super wide and say $15. So anything between this range, right? And this is huge. Like we're talking a 15,000% range right now, right? That's a 15x. But if arrow doesn't get up to 15, let's say it only gets up to 10. I'm still taking profits. Not all the way, maybe only took 75%. But this is a way you can effectively take profit as you slowly are laddering out a position. And likewise, if you build a very wide range, like I want to sell my arrow at 10, and I want a dollar cost average if it goes down to 75 cents, you can literally run this range, 75 cents to $10. And as it goes up to $10, you're slowly selling your arrow into USDC. And as it drops back down towards 75 cents, you're basically trading your USDC into arrow, effectively dollar cost averaging in. So LPs can be an excellent tool to buy in, to ladder out. You don't even have to think about it. All you have to do is come up with your strategy, do your simple TA, determine your ranges, your bottom. This is kind of the bottom. Then this is where I want to be all out. And you can use that as your liquidity range. It's a super easy, effective method for DeFi investors, and definitely beginner DeFi investors, to take profits or dollar cost average into the market. So final thing I wanted to talk about, since we were talking safety and laddering in, laddering out, and I cannot stress this enough, you need to have your crypto on a hardware wallet. Please, if you don't want to use our recommended, which is Tangem Wallet, they're just easy, super simple to set up. You can use Wallet Connect to run your DeFi positions, whether they're on Pendle or Krystal or BFAT or Orca, whatever you're using. 10% off if you use our link, and it helps support the channel, of course. But please don't leave your assets sitting on exchanges longer than you need. Exchanges will go down at the end of the market cycle. Maybe even some of the ones that I use. I do not keep crypto assets on exchanges except when I'm actively trading. When I'm not, I pull them off. I put it into a hardware wallet. So where do we go from here? I don't know. Do you? Here's the thing. Nobody knows. None of us can predict the future. None of us can know exactly when the bear market will start. But I do know that we're rounding into the final phase of this market cycle, in my opinion. This is the phase that rewards our strategies, not our emotions. Remember, Bitcoin should remain the foundation of our portfolio. DeFi and trading are our amplifiers. Be sure to plan your exits, capture yield. Be sure later this week to touch some grass. And please, if you found value in today's stream, like, subscribe, and share with a friend who's new to DeFi and crypto. It really helps support my mission, and I appreciate you. So, again, one more shameless plug. Join our free Telegram group at Dad's DeFi Space. Sign up for our free DeFi crash course at dadsdefispace.org or join our private group over there. Remember, I use Weeks, I use Blowfin, I love Kraken Exchange and Crypto.com and Gemini for onboarding. I still use Coinbase, but I don't want to promote them anymore. And use Tangem hardware wallets. Now, the market is going to test our patience. It's going to test your discipline and your conviction. But if you focus on your education, on your strategy and community, you're going to come out stronger on the other side. So thanks for tuning in. I'm Kevin from Dad's DeFi Space. Stay safe, stay humble. And as always, keep learning, keep earning, and keep touching grass. Peace. Until next time.